News right around the country. We've been telling you about the Royal Commission and the controversial recommendation in there that mortgage brokers in the future should be paid by you, the client, rather than banks and other lenders. Now, of course, the model for mortgage brokers is, well, they go and find your mortgage, obviously, they get a commission, and as a result of that, if you've got, say, a mortgage of, I don't know, $800,000, use a mortgage broker, that mortgage broker should get generally about $5,000 for that, and maybe about $1,250 per year ongoing. Well, the mortgage brokers clearly are up in arms. Many people say it'll destroy their lives. There's about 17,000 of them around Australia. But then there's another question here that we keep on asking, and that is, well, okay, if people go to banks and get knocked back by banks, but then go to mortgage brokers and mortgage brokers somehow find them finance, does that mean that there's something wrong in the system? Is it a situation those people should not have got the finance in the first place, but somehow the mortgage broker is able to do it? And is the commission an incentive? That is exactly what Kenneth Hayne QC had been suggesting in his report. Well, Mike Felton is the Chief Executive of the Mortgage and Finance Association of Australia, representing about 13,500 of those 17,000 finance brokers. He's online. Mike, many thanks for your time.
Thank you for your time.
So you've started up an ad campaign today. Actually, let's play a little bit of that mortgage finance ad campaign that's going to go to air over the next few weeks.
What would a world without mortgage brokers look like? Possible legislation changes threatening the mortgage broking industry could reduce Australians' access to many lenders and mean even less access to credit. As competition and choice decline, bank power and the risk of higher interest rates will increase, leaving Australians to pay the price while the banks profit. Don't let the door slam on competition. Sign our petition at brokerbehindyu.com.au. Authorised by Mortgage and Finance Association of Australia, Sydney.
So, Mike, that's the ad that you've put together. Just explain why you felt the need to put that ad together, because given the Productivity Commission already had said that it would not recommend this way, in fact, quite the opposite, it says the status quo as it is now should continue. Why do you need that ad?
Well, the recommendations that came out of the Royal Commission suggested a consumer fee for service, that you have the consumer paying. In fact, they also went as far as to say that there should also be a multi-$1,000 fee paid by the customer to the branch every time they go into a branch. And now, whichever way you look at that, that is simply a brand new multi-$1,000 tax on borrowing, which would challenge the viability of the broker channel, be damaging to competition and access to credit, and simply hand power back to the majors. It's obviously a huge win for the lenders with large branch networks, because as the broker channel, as viability is challenged, the access that smaller lenders have to be able to distribute their products through brokers, effectively using brokers as a shopfront, as their competitiveness is challenged, customers are forced back into the branches. And,
okay, but Mike, is there a problem here that, let's say, for example, I'm a chief executive of a bank and I go, oh, we're not growing as much in mortgages as we should be, that rather than improving my product and making it the best product in the market that is chosen by brokers and by the community at large, that I simply start to give more incentives to those brokers. You know, sort of we increase the commissions, or we increase the incentives to come to I don't know, resorts around the country, or to seminars around the country. Is that one of the issues that might be at play here, that really those conflicts have got to be done away with?
Well, in fact, Treasury pointed out that to have blanket bans on conflicted remuneration for intermediaries is not the right answer. The fact of the matter, Ross, is our industry has been reforming for the past 18 months. We have abolished volume bonuses. We've removed volume thresholds with regards to other benefits, non-cash benefits, and we certainly have changed the way that upfront commission is paid to ensure that it's paid on balances net of offset. So we would argue that the industry has reformed strongly. There is also not much difference between the percentages that are paid by the various lenders. And at the end of the day, a broker's entire business model is based on relationships and positive outcomes. And in fact, 70% of their business comes directly or indirectly from existing customers. If they produce a poor outcome, they lose their business.
Tell you what, good to have you on the program. Mike Felton is the Chief Executive of the Mortgage and Finance Association of Australia. You'll hear those ads over the next little while. So the arguments are out there right now. Give us a call.